Welcome back to our special show, Super 17. As the channel CNBC-TV18 turns 17, we're going to do what we do best. That's recommend stocks for you. And we've got all our market balas here with us to do that. This is the final round, and we're going to hear about 5 more stocks. Mr. Tulsian, let me start with you. You picked Century Textiles.
That's right. In fact, Century Textile was my pick on the Murat day, on this Diwali on maybe 31st October or 1st November. I don't remember the date. And on actually just immediately thereafter, in just 8 or 9 days, it has risen by about 150 to 200 rupees. It hit 1000 rupees mark. Actually, we recommended the stock at 400 in the month of February, and maybe in about 6 to 8 months, it gave a return of 150%. Now, again, since the stock has corrected below 800 rupees, I thought of recommending it again. For the simple reason that if you take one by one, it's a multi-product company. Now, first cement, 14 million ton. That's again on the takeoff stage, the things will start improving on a very significant way. But the 2 divisions which have really started or shown a dramatic turnaround is one is a paper sector. If you see the paper, already the EPS from that sector alone can contribute to the extent of about 10 rupees in FY17. In fact, if you can say that paper division alone is just combination of maybe 2 or 3 paper stocks, the way which we have been seeing good run-up. 300 crore will be the EBIT. I'm not referring EBITDA. 300 crore will be the EBIT from the paper division on a top line of closer to about 2500 crore. They have a capacity of 230,000 tons. Of 236,000 tons, 36,000 tons is a tissue paper, which is again a very high margin business. So that's a turnaround. Second is the realty division, and if you all seen maybe a couple of days back, there was center spread advertisement. Company has already developed 4 lakh square feet in Mumbai, one at Prabhadevi and one at Worli, and both these areas are in the process of leasing it out. The entire ownership of the company of those premises will remain with the company. I am expecting that FY18 they should be able to completely lease out the premises by March 2017, in next 4 months. For FY18, those 4 lakh square feet can only give them a rental of about closer to about 125 crore, which results into an EPS of 10 rupees. Now see the potential at the same location, they can develop about 30 lakh square feet in the next 4 to 5 years. And the debt of the company has been remaining constant anywhere between 5 to 6,000 crore. I am expecting that debt to remain in the same way or at the same level for next 4 to 5 years, because they will be requiring an amount of about 2.5 to 3,000 crore for developing all these things. Then Kalyan land of about 600 crore where they are contemplating a smart city kind of things. So this is the next kicker. Then the next item is textile division, making fine shirtings, denim and all sort of things, again with the brand. And then last is the chemical. So my evaluations, if I just take market cap of 10,000 crore, a debt of about 6,000 crore, the net present value of all these assets 4 years down the line can cross 50,000 crore. So the increase, the accretion of about 25,000 crore will straightway get reflected into the share price of the company. So as of now, I am giving a target of 1200 rupees, but this could really be, because the best part is in the central Mumbai where they will be having 30 lakh square feet developed. You know, ownership of that will always remain perpetually in the company, yielding them the annuity income. So giving a target of 1200 rupees in 1 year, but this is really a classic case to remain in the portfolio for next maybe 3 to 5 years as well.
Okay, that's one of Mr. Tulsian's favorite stocks, of course, Century Textiles. Let's move on. Prakash, another forgotten stock,
yes.
Shipping Corporation.
Yeah, I know. I thought I'll get some boring stuff also in. But, you know, this is one of those rare stocks which has got a very strong niche, and it's still available closer to its 52-week lows.
Yeah.
Okay, so the 52-week low is about 52 odd, and now it's 58, 59. Now, what's interesting is we are all talking about crude being firm and remaining elevated and all that. Now, the moment that happens, anecdotally we've seen, and it's been a long time that this happened, you know, so that's why you've forgotten. But the moment crude goes up, it starts increasing the shipment of crudes from various places to and fro. So if you recall 4 quarters back, Reliance Industry, which is the biggest refiner in the country, was bringing in crude all the way from South America, Venezuela and all. You know, and the heavy crude, and then exporting it after refining it. The same way Rosneft is putting such a lot of money into India to start putting crude here from its Siberian fields, getting it refined and selling it to the Indian market. The Indian market also is a big gas play, which even the Prime Minister has been talking about as a focus area. Now, Shipping Corporation is the largest tank owner in the country in terms of onboard on-sea tankers, and it's also the largest player in the LPG, CNG, this thing, So Petronet LNG, for example, which relies a lot on the shipments from shipping operation, and we've seen the way top line's grown, volumes have grown. All that is going to someday translate into this. Thanks to Donald Trump, the trade in the US will also trigger some sort of a percolating effect on the global trade, and that will start looking at, the mining, metals, everything will start looking up. You can't ignore a shipping cycle on a turnaround. It's secular. It's got cash. It's got a book value of 65, stocks available under 60. So it does kind of attract attention from that angle. You'll have to be patient for this. It's not a scorcher of a stock, but I'm sure it will deliver in the long run.
Okay, long-term investors who've been losing money on FCI would be happy to know that perhaps the fortunes could turn around. But Dipan, quickly on Motherson Sumi.
Yeah, I think another exciting company, one of the few Indian companies which has been able to make their overseas acquisitions very successful for them, and they're sitting on billions of dollars of orders going forward. So a short growth is there, and this whole trend is there, where cars are having more safety features, more user-friendly features. So more and more of their products are going into the car, whether it's assembly or sub-assemblies. And a lot of these acquisitions, they're taken on a lot of debt, but now I think free cash flows are coming into play, and they're going to be able to reduce the debt as well. And despite many challenges, and they had this Volkswagen problem also, which was one of the large customers, they've been able to sustain growth rates and able to sustain the profit margins as well. So I think that, given the business model, given the fact that, many more acquisitions also are likely for the company going forward, I think that it would be a good investment choice for the long term.
Okay, let's move on. Of course, we discussed Force Motors, and there was a bit of banter between Nigel and Daljit. The Moil is other stock where I'm sure Nigel is itching to ask questions before even Daljit finishes his argument. But Daljit, why do you like it? The stock has done well of late, of course.
Yes, it has done well, and I think after giving 3 stocks for very long term, I thought it would be good to look at something for 6 months or so. This is a call basically on pricing part, because Moil actually manganese prices have gone up. They have increased prices 2 times, 23, 30, 40%, 3-4 months back. Now again they have increased. Now the good part is that why this has happened, purely because China is out of the market. So we are actually importing a lot of manganese. For every 1 ton of steel, you need 10 kg of manganese. So if that's the simple maths, you need how much manganese is required, and India produces only 2 million ton, whereas the requirement is of 10 million ton. So there is always a shortage, and so anytime any supply disruption happens anywhere in the world, it will increase the prices here. So realization goes up. So just to give you an example, last year they had some 5,000 plus kind of realization per ton. Now they are talking of something like 7,000 rupees. So which will mean that all this 2,000 will flow down to the bottom line. So that's the kind of numbers we can look at. So from 340 odd crores which they did EBITDA, we are expecting that this time they'll do around 500 crores. So that is what will play out in the market stock price also. Even at current prices, it will be around 5 times of EV to EBITDA. So in good times you can take it to 8 times or something of that.
Okay, and every month of course Nigel tells us about that price hike. So over to you, Nigel.
That's right, Anuj, and we broke it first on CNBC-TV18 in September. They hiked prices after really long, and as Daljit said, 4 months on the trot they've been hiking prices. But Daljit, we have similar taste, I think.
Yeah.
Force Motors, Moil. I married Namneet also. So anyways, Daljit, just one query. Actually, last evening I was looking at Moil very closely. And one of the reasons why prices have gone up globally is because Woody, the Australian mine, that's been shut down in February 2016. That used to produce around 1 million tons approximately. Now prices, as you said, have doubled. So there's always that fear that mine will come back into play.
That is exactly what I said, for 6 months, because this is a call only on pricing.
Correct.
And pricing is something which is not in your hand. It is all dependent on demand-supply situation. The day you get any news that something is opening up, somewhere something is happening, the stock will come down to that level only. So that's why I said it's not an investment call for portfolio 3 years. Like Shilpa Medicare, I said for 25 you can keep.
Yeah.
But you can't keep this for 10 years. That's the reason.
Okay, one final pick coming up for you, and that's our special 17. Mr. Tulsian, you want to do the honors? Which one?
Next is Sandur Manganese. In fact, you can say that this is a combination of Moil and NMDC. And in fact, I have been taking a positive call on both. If you see NMDC iron ore prices have increased by about 30% in last 3 months, manganese ore prices have risen by about 40%. If you just place the quickly, because Sandur Manganese has not been able to produce the desired level which they have the reserves with them of manganese ore and iron ore, because of we all know the Supreme Court empowered group of committee having appointed, the judgment only came in the month of May 2016. And if you see the kind of production which now they will be making is 20% of MOIL and 10% of NMDC. Let me quantify that. 2 lakh ton plus will be produced by the company on the manganese ore for the FY18, and about 3 million ton because NMDC is producing 30 million ton, and manganese ore, Sandur Manganese can produce about 3 million ton on the iron ore front. And if you see the same kind of price benefits is available, and the mines of all these of this manganese ore and iron ore are in Karnataka near Bellary. And JSW Steel is very keen to have a long-term arrangement because they have their 18 million ton steel making capacity. They want about 30 million ton, and they want to secure 3 million ton entire production. In fact, people have been, street have been talking that they look to acquire the company. Companies having the enterprise value of just 600 crore, market cap of 700 crore, cash equivalent of 100 crore. In the first half, they have posted an EPS of 14 rupees. And while that was at zero, I'm talking before exceptional item for FY16, minus 1 crore. So I'm expecting that FY17, the situation is going to be 30 rupees EPS, and the kind of Daljeet and Nigel has said, I'm not negative on the iron ore and the manganese ore. The prices, even if the Australian mine opens up, I'm not saying that you will earn super profit. The advantage with Sandur Manganese will be the quantity production. The kind of production we will be seeing about 150 to 200% increase. And I'm expecting that 45 to 50 rupees will be the EPS for FY18. And as I said that as a corporate announcement, I'm not trying to speculate on that news unnecessary to create controversy, but JSW have confirmed that yes, we are in a negotiation on a long-term basis and all that. Debt-free companies, such a huge reserves. The reserves can be, in fact, the theme of this reserve capitalization or exploitation was my theme in Hindustan Zinc in 2002 when the company was acquired by the Vedanta from the government. And similar thing can happen here, and Hindustan Zinc's post that has risen by 140 times. I recommended the stock at that point of time at 14, and if you see now 280, that is 2800 after that. So I'm not trying to say that this is kind of a comparison. The value, the capital value of the mines are humongous. You just cannot take a call on the earnings alone. You need to take the valuations calls on the ore or the reserves having held by the company on manganese ore and iron ore. So with this background, I'm giving a target of 1170 for next 1 year, but I'm keeping my positive stance for the next couple of years on the stock as well.
Okay, since we've thrown a lot of names, numbers, PAT, EV, the valuations and estimates, let's do a quick recap then of the top 17 stocks that we've recommended for you as our channel celebrates its 17th birthday. So these are Mr. Tulsian's recommendations. He's betting on Z Media, Dwarikesh Sugar, Dynamic Products, Century Textiles and Sandur Manganese. Okay,
and we have Prakash Diwan's picks as well. Trent, Shakti Pumps, Dynamic Products and Shipping Corp.
A recap of Dipan's picks then. He's betting big on Strides Shasun, Aurobindo Pharma, NBCC and Madison Sumi.
And Daljeet Singh's picks then, Jubilant Life Sciences, Shilpa Medicare, Force Motors and MOIL. Actually that's 16 stocks because there was one overlap. Any impromptu stock from anyone? Prakash would want to take anyone. So sort of what you call...
That's the googly you're throwing in.
The googly, it's okay. If 6 months down the line, if it doesn't do well, we can say, okay, you didn't have the...
No, that goes for all the 4 stocks. Yeah. So yeah, one of the stocks that again, which I felt is again offering value because of this recency effect of results. The results were a bit tepid and the stock took a hammering. It's called Dilip Buildcon.
Okay.
Fairly new. It's it doesn't have a huge history as yet in the listed space. But what's interesting is the order flow that it has. And not from just road building, which has been its prime source of growth. This is more from the central coal fields and the northern coal fields. So it's getting into a lot of these new businesses which are difficult to execute for a lot of other people. Their capability is that they own a large part of the equipment that goes into EPC work, construction work. And they've had always delivered much earlier than scheduled, in terms of their earlier projects, other projects. So they come with that kind of pedigree which is very strong. I think the stock will certainly get re-rated soon. Disclaimer is, I hold it to the IPO days, which is not very recent, but which is not very long, but you need to look at these stories after this whole money that's coming into the infrastructure place. So I think you could look at that as well.
Okay, gentlemen, thank you. Those were 17 quality stocks by our 8 stock pickers. With that, we're going to wrap up on this CNBC TV 18 special. Thank you for watching.